If you want to become financially independent, then this video is must for you, because what I'm going to share with you is that how I become financially independent. Hopefully that will actually give you some sort of a clarity in that through property investing, how I become financially independent. If you want to know, then stick around. Okay, so I came to Australia in the year 2014. So when I came, I as a working into an IT company, and I, rather than doing like a proper employment setup, which is like being an employee, I set up my own business, which is what the company that I set it up. Through that company, I was doing that contracting work. So I was making a good amount of money. Then I realized that, okay, this is good, but at the same time, I want to invest into property. I didn't know anything about the property. So the first thing that I did is that I was learning about the property investing. I read multiple books. I went to seminars. I did quite a few things for the first 1.5 years after I came to Australia. So when I got that knowledge and I understood that, yes, residential real estate, which is basically buying houses, is a lucrative opportunity. I was living, or rather I am still living in Sydney, and I was looking that in Sydney it was not very lucrative in terms of getting positive cash flow properties. So in residential real estate, what I realized is that Brisbane or closer to Brisbane, where I can find residential properties which is positive cash flow. So at the time I was looking for about $350,000 properties, and the rent that I would be getting about $480 to $500 per week. And if you recall, in 2014, 2015, the interest rate was hovering around 4%. So if you have these three parameters, which is like $350,000 property you can buy, it's a nice 600 square meter block, 4 bedroom, 2 bathroom houses, or sometimes even 3 bedroom, 1 bathroom house as well. And it could be, rented out 480-500 per week. So it's straight away positive cash flow. Yes, it was not a great positive cash flow, but at that time I didn't know much. So I was looking for a positive cash flow. Even $20, $50 per week is means like once you bought that property, then it is after paying all the expenses, including all the outgoings, which is basically land tax, management, rates, insurance, everything after paying also, because the interest rate was around 4%. This was 2014-15. So since then I kept on buying properties one after another. Almost every year I started buying one properties like that. So then when I bought quite a few properties, and then I realized that the value of that property, it was not growing that much since 2015, 16, 17, 18, until 19, those properties was, it grew a little bit, but it didn't grow. So at that time I was questioning myself, like, what am I doing? Is it the right asset class I chose? I could have better to invest into markets, and I could have probably got a better return. Then in 2019, COVID happened. We all know what happened. The property price gone up significantly. And since 2019, 2021, the property price grew significantly high. And as a result, all my residential properties grew quite a lot. In fact, some of these properties become like 2.5 times, very close to even triple. The property value gone up since 2014 in some pockets in Brisbane and the surroundings areas where I bought these properties. So what happened is that I realized that although the property value gone up and the interest rate has also gone up and the rent has also gone up as well, but not as proportionately. So just to give you an example of that, let's say one property which is like a $300,000, $350,000, $340,000, $350,000 property that I bought, that one, it became like about $750,000, but the rent, it was around, I was getting 500, it gone up to 800 per week. But what has also happened is that the interest rate, which was 4%, that has become 6%. So, and plus all these outgoings, all the expenses also has gone up. So while I got the equity, I got that money from that property in terms of equity, but I was not getting, now suddenly these properties became negative cash flow. Interest rates gone up, cost of other things, maintenance cost, everything's gone up, but the rent did not catch up significantly. So at that time I was asking this question, okay, how? Because my financial goal was to get 100,000 passive income at that time, which of course is over the period of time is changed. Now I think $200,000 passive income that I needed to call myself financially independent. So I was saying, looking for that, okay, what can I do? Where can I find properties where it is going to give me positive cash flow? And at that time I ran into multiple seminars and got to know about commercial properties. Now I knew commercial property quite a bit even from 2014-15, but did not have that capacity, courage, or kind of a right mindset to invest into commercial property. It was only in 2023 when I started investing into commercial property. And as soon as I started investing into commercial property, the two properties that I bought, that itself made me financially independent. So the first property that I bought, which is called a petrol station, it is not in Sydney. I live in Sydney, but it is somewhere in Rockhampton, which it's in between Brisbane and Mackay. So what happened is, when I bought this petrol station, which is a high net income that I was getting, so $1.24 million purchase price, and it was at that time giving 96,000 net return. When I'm talking about net return, means all the outgoings, council rates, insurance, everything will be paid by the tenant. And this was a pivotal moment for me. That means just buying one property, which I paid $1.24 million, and I am getting 96,000 rent. Even after taking, let's say, 70%, 60%, at the time I think I took 55% bank loan, because a petrol station is generally, bank is not going to lend you more than 60%, and being the first time investors, probably they are even more conservative. So I could not buy more than 60%, but then what I realized is that by paying 40% from my pocket, it became a positive cash flow from day one. After paying all the expenses which is been paid by the tenant, plus your all like a mortgage payment and everything, I was keeping roughly about 4 grand per month. Now 4 grand, $4,000 if I was keeping at that time, which has gone up by now because of the rental bump that happened. I was saying that, okay, so if I can buy this 3 or 4 this kind of properties, similar, not the same asset class, this kind of return properties, then I'll become financially independent. And then I hit another jackpot kind of way, that I was looking for a industrial property, and I bought another industrial property somewhere in Emerald. And that Emerald property is giving me $190,000 net return. Now $190,000 net return after paying the what you call the mortgage payment, and again this is also a net return, which means the tenant pays all the usual outgoings including land tax. So in other words, that I was keeping about like 70,000 rent after paying all the mortgages. So 70,000 plus about 48,000. So you can see that it's giving me about 180, 120,000, which is about $10,000 per month. And that is what I needed. Right now I need, to call myself financial independent. Now bear in mind though, financial independence doesn't mean that you would not do anything. It means like now it gives you a choice of what you really want to do. And that is exactly I do. As soon as I hit that target, I left my job. I became financially independent. I actually set it up a company where I can help more people how they can become financially independent, which is what this company is for, where I actually want to help way more people that perhaps you already have this kind of situation where you bought multiple residential properties and now you want to shift your growth in terms of income. Perhaps you are already thinking of starting, even though you do not have anything right now, you can still start directly into commercial property and make money. You may not be able to buy like a $2 million or $1.5 million commercial property, but you can still start with like a $300,000 property or even $250,000 commercial property, which can still be a positive cash flow. You need to learn quite a few things. You need to grow. Your mindset needs to be in that side. All these things that you have to do. So this is how I became financially independent, buying just 2 commercial property. Of course, I used some of the equity and I sold some of my residential properties as well, which actually helped me to pay off the deposit that I needed for these commercial properties. I hope you find these videos helpful, and it actually helps you to it motivates that it's simple things, just a simple change of pushing the money from your residential to commercial and can make you financially independent. Look around your portfolio, find out that where you are leaking money. If you already have a residential property or multiple residential properties, ask yourself the question, how will you become financially independent in next 5, 10, 15 years? What can you do to make yourself financially independent? And that if the answer that you have already found, by all means stick with it. Do not change. But if you don't find it, just make sure that you look an alternative way like I did. Thank you so much for watching. I'll see you next time. Bye-bye.